Result season is upon us again. This quarter has the advantage of the low base of demonetization in the year-ago quarter, but it also has the disadvantage of some continued GST adjustments and, of course, weakness in corporate banks. Hello and welcome to part 2 of our special earnings season, Curtain Raiser, Quarter Se Quarter Tak. In this episode, we are going to cover all the fourth quarter expectations from the oil and gas space, cement, NBFC, pharma, metals, power, what have you. I'm Lata Venkatesh, with me Prashant Nair.
Hi Lata, and it's not just me, but and rather us, but the entire research team will pitch in with, of course, sectoral insights. Our three experts who know the numbers like the back of their hand: Nishchal Maheshwari of Edelweiss, Sanjeev Bhasin of IIFL, and Gautam Dugar of Motilal Oswal. Gentlemen, all of you, thanks very much for being with us here on the show today.
It is time we took a look at what you can expect from the oil and gas space. Sonal Butra first to tell us those numbers. Sonal.
Well, few things to keep in mind is that Brent has risen 9% sequentially and is up 24% year-on-year. Singapore GRMs are at $7 per barrel, which is down 3% sequentially. For the big boy Reliance Industries, we are expecting GRMs of around $11.1 per barrel. That will be driven by strong performance in its petchem segment. For IOCL, we look out for inventory gain, which is expected at around $2.5 per barrel. In terms of BPCL, throughput is expected to go higher by 6% sequentially, but that is expected to be flattish for HPCL. Talking about gas production, domestic gas production has risen by 2.5% in 11 months FY18. That will augur well for ONGC, where we are expecting 4% rise in the gas production. For GAIL, we are expecting strong transmission volumes because of higher realizations and lower feedstock prices. City gas distribution stocks are expected to do well. For IGL, we are expecting CNG volumes to go up by 10%, and same for Gujarat Gas, expect 10% growth in volumes YOY. So it looks good for these companies this time around.
Okay, so that is oil and gas. Sonal, thanks very much for that. Next, we focus on the pharmaceutical space. I mean, pharma has broadly been divided between India-focused businesses and companies which are predominantly dependent on US. Will that distinction play out this quarter as well? Ekta is here to tell us that. Ekta, over to you.
Well, it's expected to be another muted quarter for pharmaceutical companies in Q4 of FY18. Now, for the US markets, it's expected to decline for the fifth consecutive quarter with a decline of around 1 to 3% on a year-on-year basis, primarily due to the pricing pressure which continues to plague the US markets. However, some companies such as Cadila and Natco are likely to benefit from a strong flu season and the drugs such as Tamiflu that they're selling in the US markets. Domestic markets likely to be stable with up to a 10% growth this time round. Margins are likely to be similar to the previous quarter, and again, commentary would be very important. One, in terms of what FY19 is looking like, and two, what the regulatory status of many of the plants of pharma companies are currently.
Okay. Let's get some opinion before we get to more sectors analyzed. Sanjeev, what's your take on between pharma and... Okay, let me come to oil and gas first. Would you prefer the gas stocks?
Well, yes, I think the gas utilities will report good numbers, and we've seen, ex-bonus, GAIL and all have corrected sharply. We think GAIL can show very, very strong volumes. Aside from that, IGL and Petronet, all these three should be very, very strong. On the upstream, we think ONGC and oil, along with Reliance, will show strong numbers. And for BPCL, it could be an outperforming quarter, given that GRMs could actually expand on the upside.
Okay, Sanjeev, thanks for that. Let's also get a quick view on the pharma space. Nishchal, any place to hide there?
I think the only stock out there which seems to be doing well is Biocon, if you look at from the market point of view, but we do not have it under coverage. What we like, Prashant, in that space is the healthcare sector. So we like the hospitals and we like the diagnostic space. I think pharma in itself basically has got a long way to go, basically, because the US market still continues to be reeling under pressure as far as margins and top line is concerned. And we are got most of these stocks basically on a hold, and we are recommending funds to refrain from buying the pharma sector per se.
Okay. Guys, let me cheer you all up. from this illness and wellness space and pharma companies not doing well. Here's one sector whose financial health is beyond question, NBFCs. Abhishek, tell us what to expect.
Amongst the NBFC space, especially in the gold finance, now GST and demonetization is behind us. So expect a modest loan growth and profit growth for both Manappuram and Muthoot Finance. In the consumer and two-wheeler, the sector has done well, so that should augur well for both Bajaj Finance and Shriram City Union Finance. In the housing finance sector, owing to increase in competition, you could see moderation in growth and net interest margin to also come under pressure owing to rise in the cost of funds. In the MFI and small banks, now rural market has really done well, so that should aid in all of the MFI players reporting good, strong set of numbers. However, the customer acquisition will be a key focus area to watch out. In the vehicle finance, strong CV sales have been seen in Q4 FY18 amongst the manufacturers. So you could see growth in CV vehicle financiers like Shriram Transport, Chola, Sundaram, etc. Now, one thing to watch out will be the 90 days transition for Shriram Transport, wherein the gross NPA will now be qualified under 90 days as against 120 days earlier. Back to you.
Okay. Time was when NBFC was an afterthought in the banking space, but now NBFC is a rich sector with consumer finance, home finance, wealth management, insurance, mutual funds, what have you. Gautam, your pick.
Yeah, so as I mentioned in the beginning, this is a sector which has been very consistent. Of late, there has been some scare because when bond yields shot up, people were worried about the elevated valuations. But now that bond yields have softened again, there is some cheer back. And growth continues to remain extremely strong and consistent and across the board. So whether it is Shriram Transport or Chola or HDFC or a Bajaj Finance, everybody is growing upwards of 25%. Of course, HDFC is growing at 13-14%, but rest of the pack is growing upwards of 25-30%. So I think valuations can stay elevated there as long as the growth visibility is there. Our preference lies with Shriram Transport, which we have not changed. We've just introduced Bajaj Finance in our portfolio, and HDFC stays in our model portfolio. I think this is going to be another star sector of this season, along with auto and metals.
Okay, if it's a star, then we'll take opinions from the other two as well very quickly. Nishchal, you still think there is a scope for price movement in this space, or is it well priced?
I think the stocks have corrected quite a bit, Lata, in the last quarter. And most of the stocks have come, given away the froth basically. And I think there is a good scope given that most of these companies are likely to do 25 to 30% kind of growth. And there are two factors which are helping them. One is obviously the PSU banks seem to have vacated the space. That is driving the growth. And again, in the case of real estate also, I think that's another space where most of the developers are looking for financing, given that they are afraid for any reason they will be pulled into NCLT and they may lose the project altogether. So I think these are two spaces which is helping the NBFC, and we continue to like the whole space and housing finance in particular in that.
Okay. Sanjeev, you are the closest follower of the NBFC space. What should you watch out?
Yeah, so Lata, we think that the price correction was an excellent point to get in. For us, Shriram Transport continues to be the best play on the CV cycle. Mahindra would be an added beneficiary of Mahindra itself, the parent company, doing extremely well on the tractor front. Ujjivan will be a dark horse in the microfinance space, given that the double whammy of demonetization and farm waiver would be off. And of course, the dark horse has really been LIC housing. We think the worst of the NIM and asset quality could be behind us. That, along with Bajaj Finance and DHFL, could surprise on the mortgage front. Okay, super strong space and strong results expected. Okay, we'll move on to one of the core sectors now, cement. Utilizations apparently are at 5-year highs. Volumes will be strong, but the sector isn't expected to do too well. Nigel is standing by with some details. Nigel.
Well, some brokerages like Edelweiss are expecting a bit of a disappointment from the cement space on a year-on-year basis. That's because cement prices didn't really live up to expectations, given that it's the best quarter, while input costs did spike up. So that's what could impact the profitability in the past quarter. Well, focusing on certain stocks, UltraTech Cement, we're expecting a sharper growth over there. That's on the back of consolidation of JPA's assets. So that's what helps volumes, but impacts the EBITDA per ton. Well, Ambuja Cements, that's going to be reporting numbers on a low base. Volume growth of only around 5% because certain parts of West India, over there, in fact, demand was impacted. But profitability as well as EBITDA per ton will improve on a small base. Shree Cement will see some volume growth. That's because of capacities coming on stream. And despite the fact that we are seeing that input costs will spike up, Edelweiss expects the EBITDA per ton to jump up by more than 10%. Edelweiss says that the past quarter could be more or less a subdued one, but going ahead, they're optimistic on demand picking up owing to election year. They also believe that the sand availability issues should get sorted out.
Nischal, what is your view? Cement?
So I think this quarter, as Nigel was putting out there, basically has been a disappointing quarter because you had volumes coming up, but the prices couldn't hold on to the prices, and the input cost was going up. So you're going to see profitability getting impacted. But going ahead, what we've seen in both in South as well as in North, basically that the cement, the sand issues are getting sorted out, especially in Tamil Nadu and in Uttar Pradesh. So these are two big consumption areas, and prices have also gone up, and the prices are sustaining. So we see that the coming quarters is going to be good for cement, and we have seen this kind of record orders being put out basically as far as infrastructure is concerned. So if you put two and two together, I think good times should be ahead for cement sector.
Okay, Gautam, any thoughts? Cement?
I think cement is that sector where macros always looked beautiful, but the execution on micro front has been, very subpar, and I think that story continues. Sometimes it is because of lack of pricing, sometimes it's because of higher costs, but the fact remains that for the last 4 or 5 years we've not seen any meaningful earnings out there. But as things improve on the capacity utilization front and infrastructure and road building continues, there can be some better times out there. We like Shree Cement in that space. We've introduced that in our model portfolio. The recent correction did provide a good buying opportunity, but this quarter should be a kind of forgetful quarter.
Okay. Gentlemen, we have to take a break on that note. We are coming back, and there are lots more sectors that we have to take stock of: metals, realty, media, power, all that after this break.